If you're currently stationed at Davis-Monthan Air Force Base or you're a veteran and you're being relocated to Tucson, Arizona, we're going to get into making sure that you have a complete and accurate understanding about how VA financing actually works. Unfortunately, I've seen too many times that a veteran was misinformed and that caused them to miss out on the house or leave this benefit on the table and spend thousands of dollars more than they needed to because they were wrongly informed about the great benefit behind VA financing, one that I think is actually one of the best ways to finance real estate on the market. I'm Derrick Polder with the Polder Group here at CrossCountry Mortgage, and we've originated thousands of loans. We've been among the best loan officers in America, not just here in Tucson, but nationwide. And today I'm going to get into why VA loans are so powerful. And in fact, many times in my career, I've heard veterans say, wow, I wish I would have known this the first time I bought the house, or I had no idea that I could do that with my VA benefit. So we're going to dive into all that. We're specifically going to get into things such as how entitlement works, minimum property requirements, how the VA appraisal process is different from others, and things like your your funding fees, and how that will vary based on your benefit. So let's go ahead and dive in. So first off, let's talk about entitlement. I mean, entitlement is really how you know that you have your VA benefit. It's something that you should check out up front. Just because you're in the service does not mean that you automatically have your VA benefit awarded to you. In fact, I've seen several times over my career that someone thought they had their VA benefit. They were doing all the numbers based around VA financing, only to find out that they were not awarded their benefit just yet, and they had to restructure financing, which ended up being thousands of dollars different. So how does one earn their entitlement? Well, it depends. It comes a variety of ways. Let's start with being active duty. If you're active duty at a time of war, basically you're in harm's way, you're going to get it the fastest. At 90 days, you earn your benefit. If you're active duty at a time of peace, you'll get it after 181 days. If you're looking at other types of service, maybe like reserves or National Guard, then at that point you'll need 6 years of service before you earn your benefit. What we would do as the lender is we get your information, name, date of birth, social address, and we will actually send it into the VA and we can confirm your entitlement. And usually we can get it back pretty quickly, same day, within 24 hours. Sometimes there's additional research that needs to go on. Usually if it's older records before a lot of computer storage, that might take up to 7 or 10 days. But for most people, especially nowadays, we're going to find out very quickly within that 24 hours or less if you have your benefit. A quick note on this, for those that are reserves or National Guard related to the 6 years of service, if you did get activated under Title 10 and you did your 90 days, that will skip over the 6 years and give you that same fast track for benefit. And I have also seen a surviving spouse scenarios where someone who was married to an active duty or veteran and unfortunately they lost their significant other, they can get the surviving spouse benefit. So again, the same benefits of a VA loan even if you never served. So we just talked about your entitlement or your certificate of eligibility. That means, hey, you have your benefit, but then there's a question about how much benefit you have. And typically this is going to be something that's nuanced, especially for someone who's used their VA loan before. And I've seen two different circumstances here. I've seen cases where a veteran has purchased a home using a VA loan before, and they might have had something happen, a short sale or foreclosure. That does not take away your right. It does not mean that you lose your right to use a future VA loan. But what it does is it takes away how much benefit you have. So I've seen circumstances where someone might have had, they were part of the 2008 meltdown. They had a house that went into foreclosure and they thought they could never use their VA benefit again. And we do the research, we pull their entitlement and find out that, hey, as long as they keep their price point within this range, they could buy another house, VA 0 down, or maybe they have to put down a little bit of money, but they still get the great benefit of VA financing, which is usually lower rates, no mortgage insurance. What if you didn't have anything wrong with credit? There was no short sale or foreclosure, but you bought a house here in Tucson, Arizona, and then you get PCS or you get ordered to relocate to Texas, and you love this house in Arizona, and you think maybe one day I want to come back to it, but I don't want to sell it today. You could actually rent that house out and use your VA benefit to get a second VA loan. And it may even be a second house that you bought with 0 money down. And I've seen this countless times. And this is one of those areas where veterans are blown away that they bought one house for a couple $100 grand in one state. They relocate here. and they're able to buy another house for $300,000, $400,000, $500,000 and still put zero money down. I mean, they say real estate's one of the greatest ways for the middle class American to increase their net worth. And when VA lets you get 2 houses with zero money down, there's absolutely no way you're going to beat that formula. So now let's talk about the VA funding fee. So VA is such a great program. It requires zero money down. It requires zero mortgage insurance. But there is a catch, and that catch is what happens for anyone who took out a VA loan and they default. This could be either they went through financial tough times, or maybe they were just struck by a bolt of lightning. Well, if the bank gives you a loan that you put zero money down on and you're not paying mortgage insurance, how and why would the bank still give veterans these mortgages at zero down? And the reason why is because these loans are backed by the government. People are confused about this. The government doesn't give you the loan. VA loans are privately funded. Banks are the ones that still give you the mortgage, but banks are in partnership with the federal government, and they're getting insurance basically, and that's paid through, it's called a funding fee. Now, VA does not charge the veterans a monthly cost like you would on another mortgage where you're paying PMI or private mortgage insurance. Instead, what they do is they charge a one-time fee up front, and it's a percentage based on how many times you've used your VA loan. So if you've used your VA loan, if this is the first time that you're buying a house, you'll pay 2.15% on top of your loan. So for every $100,000, you're gonna have $2,150 that goes on top of the mortgage. What's nice about it is VA does not require the veteran to pay this out of pocket. They just put it in your loan. So you're paying it over time, or whenever you sell that house 3 or 5 years down the road, you just pay off that full balance. If you're using your VA loan a second time, the fee actually goes up to 3.3%. So every $100,000, you're gonna add that $3,300 on top of there. So you could have a scenario where you're buying a $400,000 house and you're paying, $13,000 plus of additional costs on top of the loan. Again, not up front, not a closing cost, but a higher IOU than you originally borrowed. When you compare that to other mortgage products where they're charging you monthly PMI, it's still a very, very good deal. Now, there is a trick here that if you're on your second or third time use and you don't want to pay that 3.3% because it was only 2.1 the first time, or 2.15, then you could put a little bit of money down. And VA doesn't require any money down, but if you did like 5% or 10%, it will reduce your fee. You could pay 1.5% or 1.25%. So it really brings that cost lower. Because of this funding fee, here's a couple of things. A, again, it's going to allow the veteran to buy the house with zero money down. B, the monthly payments on VA loans are usually lower because you're not paying the mortgage insurance monthly. You're just paying that one-time upfront cost. And because, this is the third benefit, or the C benefit, is because these loans are backed by the federal government, VA loans oftentimes will have a lower interest rate than your standard 30-year conventional mortgage. So veterans actually buy houses and have more affordability or more buying power than someone who might be doing 5% down with an 800 credit score doing a standard conventional mortgage, because that person's going to have to pay for PMI. So I want to talk about minimum property requirements, and some might even argue this is the negative part of a VA loan. And in Tucson, Arizona, where I'm at, every market's a little bit different, but we have properties that are on acres of land, single wides, double wides can be popular, and then we have houses that are in beautiful foothills that are selling for millions of dollars, and they're pretty wide open to nature. And you might have things like termites or things along those lines. And so I've had agents or even customers tell me over the years, well, I don't know if this house will qualify for a VA loan, or I don't think VA financing will work on this house. And I think people will misunderstand what VA is attempting to do with minimum property requirements. The minimum property requirements that VA has are not meant to be a barrier. They're really meant to protect the veteran. And I think they're a good thing because I always tell veterans, you worked hard, you served your country, you should lean on your VA benefit as much as you possibly can. And if there's something wrong with the house, meaning there's maybe a repair or some deferred maintenance, doesn't mean that VA won't lend you or approve the loan for it. They're going to call it out, and there's many things that lenders can do to work with you on there. A, we can simply identify, oh, this house has termites. Let's ask the seller to fix it. And if you're saving thousands or even tens of thousands of dollars on your VA loan, it would still make sense for you to use your VA mortgage, even if you have to negotiate back and forth with the seller to fix the termites. The other thing that we can do is, let's say there's something called out on the appraisal. Maybe the appraiser identifies that there's a leak and they want the roof to be repaired. You can still do things like escrow holdbacks, where that's a way that you can still work around whatever the VA requires. The lender works in concert with you or the other people involved, the agents, the seller, and we compromise to meet VA standards. It means that you don't have to say no to the loan. There's a way to still get it done. And if you are in a situation like that, just reach out to us. We'll walk you through, because that can be more nuanced. But the main point I want to drive here is, if the house can qualify for a conventional loan or can qualify for an FHA loan, there's no reason it can't qualify for a VA loan if you're working with the right professionals that understand that the goal of VA is not to stop the transaction, it's just to protect the veteran and call out things that might be harmful down the road. So I think something that goes hand in hand with minimum property requirements is the actual appraisal process. VA was really, I think, forward thinking. The appraisal process that VA does today is very similar to how all appraisals are done. But let's just go back in time. Not that long ago, lenders could pick whatever appraiser they wanted, and they could give them the order and just say, you know, Derrick, you're our preferred appraiser. You're going to get all of our business. Give us the best fee. And if they felt like Derrick was being too tough, they could say, hey, Derrick, you know, we give you a lot of business. Why are you being so tough on this particular property? Well, 2008 happened, and the industry got turned upside down, and now banks are not allowed to pick appraisers on any type of loan. Like, we have to have a random lottery of who gets assigned the appraisal, just to prevent collusion, coercion, and that way the buyer gets the fairest valuation property without any type of manipulation on that. Well, VA was one of the first ones to do it that way. Even before the meltdown, VA has a process where you order a VA appraisal through a portal, and it goes out to a random appraiser who's been specifically certified by VA to understand the VA financing process. And they have a duration of time. It was 10 business days, now it's 7 business days, to give you the appraisal report. And one of the things that VA does differently from other financing, which I actually really like, is they have a process called Tidewater. What that means is, if you're in contract, let's say you're buying a house, you and the seller have agreed to spend $400,000 on a contract, and the appraiser goes out to the property, and when they start looking around, they say, you know what, I don't really see how this house is going to sell for $400,000. There's no other homes nearby that I see that have sold for that price. I think this house is a little overpriced. Instead of turning in the report with a low number and then that jeopardizes the transaction to fall apart, that VA appraiser will raise the flag, and they will initiate what they call Tidewater. It gets its name because this was actually piloted in Tidewater, Virginia, where it was first as a test case, and now it's been adopted as the natural standard of practice they've done since then. But they'll raise Tidewater, and what that allows is it gives the realtors involved the chance to say, well, here's the reason why we think it's worth $400,000. Did you see this house? Did you see this comp? Did you know that we have these upgrades in the house? And I've seen cases where the appraiser thought, hey, the value's not right. Then the other experts chime in, and their appraisal comes in just fine. So it proactively prevented an appraisal issue or prevented that contract to fall apart. I've seen cases where the appraiser says Tidewater, the agents give their information, and the appraiser still says, I don't agree with you. And all parties together still want to keep the transaction working, and they disagree with the appraiser. And one of the things that's unique about VA that you can't do with other loans is you could then escalate that to a local or a regional VA office. And I've seen cases where the appraiser said, I don't see the value. The agents say, we disagree. You're comping this incorrectly. We think the value is absolutely there. The appraiser declines their Tidewater rebuttal, and the deal's at jeopardy of falling apart, and we send that same rebuttal that the realtors did for the appraiser, we send it to the local or the regional VA office, and the VA office says, yeah, we actually agree with the realtors on this one and not the appraiser, and the transaction stays together. You don't have that on other loan types. If there's a disagreement, the appraiser has the final say, and if you can't convince the appraisal to change their mind, then you have a gap there, and either the deal dies or you're paying the difference. So that's another unique thing about VA that I think is actually in the benefit or beneficial to veterans. I wanted to rapid fire through some myths now. Let's set the record straight. Myth number one, VA loans take longer. They don't. If structured correctly, you know what you're doing. You don't wait on too long in ordering the appraisal. VA loans take just as long as your other mortgage processes out there. There's no reason that you should have to worry about a prolonged period of time. Myth number two, sellers won't accept VA offers. The reality is sellers want strong, well-qualified clients. And there are some misunderstandings with realtors and sellers that they think VA transactions are harder to do. So sometimes they will say cash or conventional only. What I have found is that misunderstanding is often resolved with a phone call. Earlier I talked about properties that might have a little wear or tear, and I've seen cases where the seller says, oh, we're not going to take a VA offer because VA is never going to accept it. And we say, well, we could do an escrow holdback. Like, let's just give it a try. And sure enough, it ends up being a non-issue. So there are people that have the wrong perception, but this goes back to working with experts like ourselves that are well known to be credible and knowledgeable in our market right here in Tucson. We're going to pick up the phone and we're going to get those offers accepted, or at least attempt to educate the seller that they're misinformed. Number three, VA appraisals are deal killers. And again, this kind of goes back to that number two about the fact that VA has standards. It's often misunderstood, but I go back to what I shared earlier, that I think the VA appraisal process, when it's fully understood and when you know that you can escalate all the way to a VA regional office, I think that you have a better shot of getting a VA appraisal across the finish line when it's challenged versus some of your other loan types out there. So in closing, VA, I said this earlier, it's such a great program. You know, my father served over 20 years to this country. I grew up on an Air Force base right here actually in Davis-Monthan, and so I have a soft spot in my heart for serving veterans. You guys served us. And so it's always rubbed me the wrong way when I've seen veterans get talked out of using the VA benefit. Or when I'll see real estate agents or sellers not wanting to accept VA offers. I think that's the very least that we could do, is be open to entertaining a veteran who served this country, help them achieve the American dream of owning and buying real estate, and especially when so many times the issues or concerns are just misplaced or misunderstood. And when you work with the right experts, we're going to make sure that you get that benefit. Again, VA loans, no monthly mortgage insurance, there's zero money down. The interest rates are usually lower. It is one of the best products, and it's one of the very few things that I think we do well for our veterans. It's a great give back, and so don't let anyone talk you into leaving that benefit on the table unless they can actually put side by side that another option is mathematically better for you. We're your local experts right here in Tucson or Southern Arizona. Again, a kid that grew up on Davis-Monthan. If you're looking to work with someone who truly understands VA and will advocate for you, reach out to our office. We're always happy to help.